So just to be clear here, does any country have specific legislation that tackles this? And to go back to the point I just mentioned there, how are they managing to regulate of sorts initial coin offerings as a result?
So I think, you know, a country with specific legislation that addresses initial coin offerings is the United States. We have a piece of law that was passed in 1933 called the Securities and Exchange Act. And in most cases, so it's important to distinguish between something that's a cryptocurrency like Bitcoin and a token that is being sold that is really just a promise of some future value. You know, you have a Bitcoin and you have something that's rather like gold. It's rather like a commodity. You have one of these new ICOs because somebody said, hey, buy this from me, I'm going to make it profitable. You don't have anything special that's beyond a security. And securities are regulated under that 1933 Act, and there's a flexible test that the SEC uses to determine when something fits into that Act. And a lot of ICOs fit into that Act, basically.
Peter, just to be clear, though, so let's say a company wants to sell or raise money via an ICO. Is there a guaranteed route that they could take where they can be sure that they will not run afoul of any regulatory issues? Or are even the most fully lawyered plans still, in theory, at risk?
So, you know, the safe approach, the most lawyered approach, is going to be just comply with securities regulations, as people have complied with securities regulations for almost 100 years now. And what's that either going to look like is you're going to say, we're doing a public sale, and we're going to register, basically an IPO, but the shares will be evidenced on a blockchain, i.e. they will be tokens, so we're selling tokens to the public. But that's just an IPO, and we call it an ICO because they're coins instead of, you know, certificates that the DTC has in a warehouse somewhere in New York. And that's fine. Or if you want to be a little bit more restrictive for who you sell the token to, but you want for, you know, maybe you don't need as complete audited financials, you don't need quite as much filing as a normal registration, then you can still comply with the securities laws by doing a sale to accredited investors only and take advantage of one of the Jobs Act safe harbors in our securities laws, like Reg D, Rule 506. You can only sell to accredited investors. Or maybe a Reg A+ filing with the SEC, where you have to limit yourself to how much money you can raise selling the tokens. But those are tried and tested ways of complying with securities laws. It doesn't matter if what you're selling happens to be, you know, tokens that travel on a blockchain versus stock certificates, at least not from a regulatory standpoint. It might be quite good from a technology or liquidity standpoint, because those systems possibly have less frictions in them than, say, the legacy stock exchanges and stock markets.
But Peter, some of them have different characteristics. Some of them have characteristics of securities. Some of them have characteristics of commodities, of currencies too. So as an issuer, you can kind of pick and choose here. And I just wonder, even if as a regulator you try and ban one, they can kind of slip through the cracks. How do you enforce that ban?
So you're totally right, Julia. They are different. There are different things here. But what I'm talking about, and what Chairman Clayton was talking about when he testified before the Senate Banking Committee about 2 weeks ago, is ICOs. ICOs almost always are a company, as you said earlier, selling a token, and that token, what does it represent? It's not like a Bitcoin. A Bitcoin doesn't represent anything. It's a Bitcoin, and you can use it as a currency, and you can trade it with people who want to buy it from you for dollars. It doesn't represent anything. It's just a Bitcoin.
Yeah.
Whereas a token that you might buy in an ICO represents somebody's promise, the company's promise, to make profits. And that is a security in most cases. Now, there is a little wrinkle in that some people are selling tokens, and they're saying, in 2 years' time, this will be like Bitcoin. In 2 years' time, you won't have my promise. You'll have a token that is usable on a decentralized network, like digital gold or digital fuel. Now, there might be a gray area in the law where that transition takes place. This was a security, and now suddenly it's a digital commodity. And there may be a gap in who regulates those digital commodities once they actually are properly decentralized, once they are commodities. Now, I think that gap gets filled either by the states through money transmission licensing, which a lot of exchanges already do. They get licensed. But I think it's more interesting if that gap gets filled by having a new federal regulator like the CFTC.
Peter, I just want to get some perspective here. What is the volume of ICOs that has been issued so far, and are there projections for the volume that there could be going forward?
And what % do you think are fully lawyered and regulated? Sorry.
No, please, I love it.
No, so I can't give you total aggregate numbers. That's not something CoinCenter tracks, but I can give you some anecdotal examples that are helpful to think about. There is an ongoing token sale for something called Telegram, which is an existing platform for encrypted messaging, which rather stunningly has already raised $800 million.
Oh my God.
I'm not going to comment about whether they're adequately lawyered because it's not my business and I haven't looked sufficiently at it. And they're projected to maybe raise as much as $1.8 billion in total, which is stunning to me. Like, I started working at CoinCenter, which is a little nonprofit focused originally only on Bitcoin 4 years ago. You told me this was happening, I would have laughed in your face. So yeah. I think it's a little crazy. And then for other anecdotal perspective, you can look at, say, Filecoin out of a group of developers called Protocol Labs. Filecoin raised almost $200 million last summer, and I think they've taken, I'm confident to say, a very safe, lawyered approach. They sold their tokens only to accredited investors in a Regulation D Rule 506 filing with the SEC.